Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us for this segment, we have Ryan McCormack, factor and core equity strategist over at Invesco, to discuss weekly performance in the Nasdaq 100 index. Of course, we'll talk about the recent rate hike decision that Fed President Jerome Powell just recently made, and of course we'll go over Microsoft and Google earnings. And Ryan, great to see you as always, clearly timely having you on Wednesdays after the Fed meetings. And it's so interesting to see the market reaction. The past few rate hikes, the market has actually responded positively.
It has. I mean, in comparison to kind of the lead up to the Fed meeting, right? So you look at last week from Tuesday to yesterday, you had QQQ and QQQM down 1.33%. That's compared to the S&P 500 down 38 basis points and S&P 500 value up by 19 basis points. But it seemed like kind of negative sentiment had taken over as attention turned to today, where the Fed raised interest rates again by 75 basis points in a unanimous vote. So the range now 2.25% to 2.5%, and they've affirmed that they're highly attentive to inflation risks. They reiterated that the reduction in the balance sheet runoff, or the balance sheet plan, is continuing at its original pace, and that's expected to double to $95 billion a month starting in September. From the statement, some interesting kind of dynamics. Spending and production have softened, but they note that job gains have been robust in recent months. And as we look at that, we've seen initial jobless claims starting to creep up over the past 4 months. So I would anticipate that that's going to be a metric that's going to be closely watched as we kind of strip out seasonal adjustments and such. But the press conference is going on right now. We've seen a pop in the Nasdaq 100, possibly on the back of a Powell comment, the Fed being in the range of neutral. Looking at the Fed funds futures, implied rate for the September meeting is right about 60 basis points. Powell hadn't ruled out another 75 basis point hike, but again reiterated that the Fed will be data dependent. And over the past couple of Fed meetings, we have seen the markets react positively, and Nasdaq 100, right before we jumped on, was up 3.7% for the session.
All right, we'll take that any day, won't we, Ryan? Let's take a look at the sectors that were either leading or hindering performance last week.
Yeah, so largely hindering, overweights to communication services and tech dragged on relative performance against SPY. Healthcare also weighed on performance as the sector fell by 60 basis points in QQQ while advancing by over 1% in the S&P 500. So a little bit of a disparity there.
And Ryan, to wrap up here, let's take a look at Microsoft and Google earnings, because really the moves were made during the conference calls last night, even after the print.
Yeah, so I think even though Alphabet and Microsoft missed some analyst expectations, it seemed like a sigh of relief from investors, and that's something you and I have been talking about for a little while. Today you have Microsoft trading higher by over 5% for the session, after reported last night Q4 earnings. EPS and revenue both came in below analyst expectations, but year-over-year revenue growth of over 12%. That marks the 20th consecutive quarter of double-digit revenue growth for Microsoft. And beyond that, the company noted that it's expecting sales and operating income to increase at a double-digit pace for fiscal 2023. So from June of this year through June of next year. Microsoft also addressed the strong dollar after in June it reduced its Q4 forecasts for sales and profits, easing a few worries here. The company noted sales may be impacted by 4% for the upcoming fiscal year and 5% for the current quarter. But strength continues in its cloud services division. Microsoft's overall revenue from cloud products, that includes Azure and its Office suite, rose by 28% to $25 billion, and record numbers of $100 million and $1 billion contracts, basically commercial bookings from their end. And then Alphabet, right now trading higher by over 6.5%. They reported Q2 earnings last night. Revenue excluding payments to its distribution partners came in a little light at $57.5 billion. But a bright spot here was ad revenue beating expectations, and that helped to calm some investors after some lackluster results from Twitter and Snap showing pretty weak advertising numbers. Profits for Alphabet missed as well. Net income of $1.21 a share missed $1.32 a share. But Google Cloud saw $6.3 billion in revenue and now represents 9% of Alphabet's total revenue. So, there's been a very concerted push for Google to get into the cloud space, and CEO Sundar Pichai noted its strong momentum and substantial market opportunity as the company continues to try to catch up to Amazon and Microsoft. But Apple and Amazon reporting tomorrow. Meta is reporting tonight, and thus far, the theme has been less bad. And I think you're starting to see some investor attention starting to leg back into some of these growth names, as expectations and guidance haven't been as bad as investors may have feared.
Yeah, and Ryan, as you and I have been discussing over the past couple of weeks, I think that really is the point where earnings aren't as bad or better than expected. And I think that's really what the catalyst is. Not only that, but I think we discussed this last week, when you start to hear companies like an Apple adjusting their people count forecasts or their growth spend for next year, it's almost like, okay, we see the economic environment, we're revising our corporate strategy around it, kind of taking the Band-Aid off, and it's showing that there's no hopium, but there's actual strategic direction, and I think that has provided some clarity for the market to a certain extent.
I would agree, and you have Google slowing hiring, basically hitting a pause on hiring. You have Microsoft talking about slowing headcount, and again, these companies are being a little bit more forward looking, right? Sort of acknowledging some of the hardships that are happening in the market, and maybe addressing some of the metrics that investors are looking at. And year to date, Google and Microsoft down over 20% apiece. Since June 30th, they're both up right around 2.75%, and that's through about 1 o'clock this afternoon. So again, I think folks in the midst of this earnings season are looking at commentary from management and an acknowledgement of the scenario that we're in, coupled with some of the forward guidance numbers or areas of attention within each of these companies that I think are helping to ease some investor fears.
All right, we look forward to your thoughts on GDP next week, Ryan. Thanks for the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.